Philippine shares climbed last Friday with the PSE index notching its fourth weekly gain, although trading remained thin ahead of the long weekend. Now we're playing catch up today as the market goes back online. For more on the markets, we want to bring in Sandra Araullo. She's Chief Investment Officer at ATRAM Asset Management. Sandra, hi. Good morning. Good to see you.
Good morning, Mimi.
Good morning. So November seems to be delivering. We're up 5% for the month. We're just 5% away, just so we can finish in the black for the year. What is your expectation for December? I mean, are the stars aligned for a year-end Santa rally for this market? We've got 3 to 4 weeks to go.
You're right, Mimi. It's been catch-up for the month of November. We're optimistic that there might be a Christmas Santa Claus rally for our markets, and it's really a broad-based rally across global markets. It doesn't make sense for the Philippine equity stock market to finish, in the negative this year, considering where corporates have been able to deliver growth. Admittedly, there are headwinds, but I think there might be some relief or at least a little bit more momentum behind the relief that we're seeing for the market.
And where is this relief coming from?
A lot of investors were positioning for tighter or higher for longer monetary environment. And since the few data points that we've gotten locally and globally, it seems like there is a bit of inflection as far as the direction of monetary policy is concerned. The BSP did have an off-cycle hike. It was something that weighed on the markets. It was followed in a few weeks by the Fed holding pat. Admittedly, still very cautious in tone and still communicating maybe a higher for longer environment. Again, it remains to be seen. The data, the macro data hasn't come in yet, but that relief in the data has emboldened a lot of investors to put some money into work. Again, it really doesn't make sense that a market like ours is trading at such a deep discount. So I think it's really just a lot of liquidity looking for, trade ideas, and you have a window there to take advantage of 10-15% rally.
All right. So when you look ahead to 2024, as we roll into the next year, how are you positioning? How would you advise investors to position? You did say it's time to put your money to work, but how much allocation would that be?
So I've always, my background is in multi-asset investing, and I think the starting point for us is always how much to put in which asset class. And on one hand, rates are really attractive now. Where 6%, above 6% for your government bonds, and should the central banks cut rates next year, which is the base case expectation, that can give gains on price return for bonds, no? But at the same time, in that environment, you can see markets or equity markets deliver on, especially growth stocks, no? Growth stocks kind of move similar to high duration bonds. And in terms of the magnitude of gains that can be made in the equity space, we all know that it's a lot more significant. So I think it's a good time to come in neutral to your strategic asset allocation. So maybe if it's a balanced strategy, a more 50-50 type of allocation, plus minus 5%, depending on the swings in the market. Again, right now we think that we might have a little bit more wind behind the sails, so to speak. So we're a little bit more overweight equities and trim on the gains that will be made as we reach target prices.
All right. You did say focusing on growth stocks. What sort of growth stocks are we talking about here?
No, I was just connecting it with bonds. But actually, specifically for the Philippine market, we are most constructive on consumer names, actually. We think that there is a foreign and local investors are mostly underweight the sector. We expect a lot of the headwinds, particularly inflation, to really come off next year. And there are names out there that continue to deliver stable revenue growth. And, we think that in terms of where the opportunities lie next year, you get to choose from a lot of good names in the consumer sector.
All right. Sandra, just wanted to bring in the opening numbers. We're about 8 minutes into trade for the day. The market is in the green. The index is up by 1/3%, 21 points. We're at 62.90, just 10 points shy of 6,300. So we might see this actually break above 6,300. So far, all sub indices are in the green except for one, the financials, which is lower by just about less than half of 1%. We did share corporate stories earlier. We've got stories from STI, Century Properties Group, and now we just wanted to share this. The House of Investments, which is Yuchenko-led, is incorporating a new company that's supposed to engage in real estate activities. Are you a big fan of real estate developers at this point as you position for 2024 or not yet?
Well, not yet. To be direct to the point, not quite yet. We do think there are some structural headwinds for the property sector. That said, it's just a matter of rotation. Banks were the clear winners this year. We think it's going to be a consumer next year, and perhaps when some of the structural challenges in the real estate space or the property sector space lift, then you get a bit of a better outlook there.
All right, we're just gonna have to wait and see. Just one more month to go. I think we're ready for your blind item. Talk to us about the stock that you're monitoring closely. You do like consumers, so what do you have for us today?
Okay, so we do like this company because of we expect revenue growth to be resilient despite a challenging macroeconomic environment. So it's really owing to its solid brand equity, and also it's getting closer to unlocking a lot of the value that has been created from its acquisitions in the previous months, and even years. And it's really through improvements in operational and profitability metrics. And lastly, the big clue here is we do like consumer for next year, and this stock is expected to benefit from that tailwind.
And what sort of upside in share price can we expect from this stock?
Okay, so it's one of the few names that we expect to be able to continue on its EPS growth for 2024. Broadly for the market, we expect a little bit of so it's in the high teens this year. We expect it in the low teens for next year. But this is one of those companies that we think can sustain profit growth of 14% into 2024. And also that compares to 11% EPS growth for the broad market.
All right. Thank you very much for joining us. We're just going to have to guess which stock this is. Always good to see you, Sandra. Have a good week.
Thank you, Mimi. Thank you.
All right.